Owen Fairclough here at the start of a busy week for the Eurozone leaders. France in Hollande's first tête-à-tête with Angela Merkel. Owen, you think it's a bit of a turning point in this sovereign debt crisis, don't you?
Yeah, perhaps not so much François Hollande meeting Angela Merkel, Stuart. That's kind of par for the course, really, for these two leaders who pretty much run Europe together. What's really caught my eye is this Greek crisis. I think it's fair to say that 12 months ago it would have been completely taboo for anybody, particularly in the European Central Bank, to even entertain the idea of Greece leaving the Eurozone, let alone articulate that in public. And yet that's just what's been happening over the weekend. Key Eurozone officials breaking cover and going on the record to talk about Greece exiting the Euro, something they've never publicly really contemplated before. And in fact, ECB officials actually talking it up and saying, well, maybe it wouldn't be so bad after all. Again, it's something that wouldn't have been said a year ago. We would have been led to believe that this was a crisis. This was really the doomsday scenario that the EU could never contemplate. This was all about keeping the single currency together. And yet we're now at a point where ECB officials are working out the maths, working out what it would cost, and working out how Greece might be able to exit the euro with as little pain as possible.
If you like horror stories, listen to this next one. He told us an hour ago. Lots of estimates emerging out there. What sort of impact some kind of Greek default would actually have?
Well, on a general level, Stuart, Bank of America, for example, came out with a study that said that Greece will run out of money by July. That's at the point where Greece would physically have no money left in its coffers to pay civil servants, to pay pensions, basically to pay to keep the wheels of the economy going. Yes, it's fair to say that Greece has been in that sort of situation before, but it hasn't been in a situation where it effectively didn't have a government where it is now. Other figures as well, BNP Paribas ran a few numbers to show that GDP would likely fall by around 20%. Remember, the Greek economy is already set to contract by 5% this year, the fifth year in a row of recessions. You'd see inflation up to around 50%, and the debt to GDP ratio soaring to well over 200%. Remember that the terms of this latest bailout were supposed to bring that debt ratio down to around 120% of GDP, which is still staggeringly high. Imagine what 200% would look like.
More scary than Freddy Krueger, isn't it? Well, the fate of Greece partly rests, of course, in the hands of France and Germany, the two countries who drive the agenda for the Eurozone. Incoming French President François Hollande will hold his first summit with Germany's Angela Merkel later this week. The discussions will centre on what's come to dominate economic thinking right now, whether countries like Greece need to spend or cut spending to achieve growth.
These are difficult times for Angela Merkel. She spent the week repeatedly defending the virtues of the Eurozone's austerity pact, even at the risk of upsetting France's newly elected François Hollande. She is adamant that stabilising public finances is the best and only course of action for European recovery.
Growth by structural reform is important and necessary, but debt-ridden growth will only revive a crisis. We don't want that. We will not do it.
But a wind of change has started to blow in Europe. The rise of fringe parties and strong anti-austerity sentiment in Greece as well as France means this position will become harder to maintain without dragging the EU into internal struggle. Angela Merkel's troubles don't end abroad. Emboldened by Hollande's victory, one opposition party is threatening to refuse to back the budget agreement if it doesn't include any new measures for growth. And without a two-thirds parliamentary majority, she could lose the bill forever.
Whether we like it or not, Germany and the European Union will only defeat the crisis once we have had the courage to boost growth.
The German Chancellor's stance and Europe's economic future will be in the balance over the coming weeks. François Hollande heads to Berlin on Tuesday for an introductory meeting, and they will meet again at a European summit later this month. Both leaders have pledged to cooperate, but finding common ground on this prickly issue might prove difficult.
So a very busy week ahead for François Hollande following his inauguration. If you want a slightly alternative take on this whole Eurozone debt crisis, then why not listen to a few words of wisdom from the boss? Yes, Bruce Springsteen, warming up for the latest leg of his world tour in Seville in Spain, was happy to spend a bit of time talking to reporters after tuning up and preparing for that gig. Had some interesting words on the whole economic crisis. As an American who's seen stimulus programs in the US now coming to to Europe and seeing the whole of the Eurozone suffering, in his eyes, from austerity. Here's Bruce Springsteen.
Hard austerity is necessarily the way to get out of the economic malaise that's certainly in the States. And in the States, there was a stimulus that did work. It could have, I think, it should have been bigger, even in the States. And it seems like in France, and people have decided they don't want to go the route of austerity, and there needs to be some balance, and they got to get the economy going. So I did follow it a little bit.
Yeah, he is the boss, after all. He should know, shouldn't he? A little bit quiet there, but hopefully you could hear him. Rockstar turned economist, of course. We should have asked him what he makes of the markets right now, but instead we'll have to ask Owen.
They're actually not doing too badly at the start of the week, Stuart, given all that's going on and given all that's ahead, and of course all those concerns about the Eurozone. At least the Asian markets have started the new trading week with a few gains, but nothing really to write home about. The Nikkei up by around 0.2%. Some more monetary easing in China over the weekend has helped the markets a little bit, with the government lowering the reserve ratio for banks. The idea of that is to make them lend a little bit more as the economy starts to slow down just a wee bit.
Let's pick up on a little bit more company news now. And the Yahoo chief executive, Scott Thompson, has resigned over the misleading CV scandal, the latest boardroom crisis at the US search engine. Thompson, who fabricated a key qualification on his resume, left along with the company's chairman and 4 other board directors. Yahoo's been through 4 directors in 5 years, having seen its market capitalisation halved to $18 billion in that time. Ross Levinson, the firm's head of global media, has been named interim CEO while a permanent replacement is sought.
Door-to-door cosmetics giant Avon is expected to decide on a raised $10.7 billion bid from French rival Coty. Avon has rejected earlier offers as too low, but says it would respond by Monday to an offer of $24.75 per share from Coty, the company which owns brands like Rimmel and Calvin Klein fragrances. Coty has revealed that Warren Buffett would provide financing for the deal to take over Avon, which has seen its share price slide by a third over the past 12 months.
And Facebook is generating lower than expected demand for its shares just days before one of the biggest flotations in history. That's according to sources quoted by Bloomberg. It's understood some investors are concerned about the social network's growth prospects. Facebook admitted last week that explosive growth in its smartphone applications has left it struggling to find a profitable advertising strategy. It's due to float on the Nasdaq, of course, this Friday, with a market capitalisation of nearly $100 billion.
Now, JP Morgan Chase is one of the banks that does have a market capitalisation of $100 billion, in fact, over that. And its chief executive, Jamie Dimon, was one of the few bankers on Wall Street who managed to retain his swagger when all other banks around him seemed to be either collapsing or on the verge of collapse in 2008. JP Morgan has done reasonably well since then, but all of that came to a shuddering halt when the bank was forced to admit it had lost $2 billion through trading errors at its London branch. It's left Jamie Dimon deeply apologetic and raises questions over the future of that branch in London.
He came in to apologise. On Sunday, JP Morgan Chase's CEO admitted to a massive failure of the bank's management.
We know we were sloppy, we know we were stupid, we know there was bad judgment.
It was the bank's chief investment office that took the €1.5 billion loss over the past 6 weeks. This London office trades in credit derivatives and holds a portfolio designed to protect the bank, to hedge against financial risk.
But in how we managed that portfolio, we did lose $2 billion trading. And in hindsight, we took far too much risk. The strategy we had was barely vetted. It was barely monitored. It should never have happened.
At the beginning of April, when the Wall Street Journal revealed the bank was making risky investments, the name of Bruno Michel Ixil came up, a French trader in his 30s working with the infamous CDSs, the credit default swaps. JP Morgan may be faced with yet another case of a rogue trader, just 8 months after a UBS employee also lost €1.5 billion in unauthorized trading. Still, when the bank's toxic investments made it into the papers last month, CEO Jamie Dimon insisted it was a tempest in a teapot. A fierce critic of government regulations, he might have to tone it down.
Of course, regulators should look at something like this. That's their job. So, we are a totally open kimono with regulators, and they will come to their own conclusions.
Analysts say some of the financial activity taking place at the bank's London office constitutes a violation of the Volcker Rule, a piece of the US 2010 financial reform which has yet to be implemented and designed to restrict commercial banks from making speculative investments.
More from Owen, hour and 20 minutes. We're going to be singing Born in the USA for the rest of the morning. That's it from us. Latest news with Tom next.